One thing I keep saying is that you can't outsource compliance. This is not like tech where you give your product idea to an engineer and he goes and do it for you. Compliance is part of your core business process.
That's Eric, founder and CEO of AAA, a regulated crypto payments company helping businesses accept and manage digital assets seamlessly. Before AAA, Eric was the founder of Tunes, a cross-border payments network serving emerging markets. In this episode, we dive into the evolution of stablecoin payments, the regulatory challenges and opportunities in crypto, and how AAA is building an infrastructure layer that bridges traditional finance with digital assets. We also discuss why businesses are increasingly adopting stablecoins for treasury management and cross-border transactions. Season 3 of Stableminded is powered by Dfns, the leading multi-chain wallet platform helping fintechs, banks, and enterprises manage digital assets securely. More than 130 global clients secure over $1 billion in monthly volumes through Dfns. Manage governance and compliance, automate workflows for approvals, and unify your APIs, all within a platform that has a perfect security record. Access a broad network of ecosystem integrations. From compliance tools like Chainalysis to exchanges like Coinbase, Dfns integrates seamlessly with all the tools you need. This season, we sit down with the co-founders of Dfns to dive deeper. All right, Eric, how are we doing?
Doing well. Thanks for having me, Drew.
Thank you so much for coming on. We have a lot to discuss. I've been following AAA for many years, and we've been in relationship for a couple of years now. It's always fun to have these conversations with people now on the pod that are not new faces, but people that I've sort of been building alongside or working alongside for just the last few years of my time at Coinbase, especially. I know that's when we met. For those who are just meeting you for the first time or first hearing about your work or AAA, give a quick intro on your name and what you're doing.
I'm Eric. I'm a French guy living in Singapore for over 20 years. I started AAA 5 years ago. Before that, I was the founder of a company called Tunes, doing cross-border payments into emerging markets.
So for those who are just now tuning in, this show is all about stablecoins. And so this season, powered by Dfns, who I know you guys use on the wallet infrastructure side, they're the ones who are powering the season. And a lot of what we're going to talk about today, I think, has to do with just how you think about things like wallet infrastructure, compliance, the decisions that go into choosing how you build something like AAA. So we'll get into that sort of thing. But I'd love to start with your background a little bit, just because I know, even Tunes is now still a massive, massive influence within the world of cross-border payments. How do you look back on that experience now, driving AAA, leading this business, and still seeing Tunes be something that's still so significant? And maybe for those who don't know what Tunes is, it would be helpful for a brief overview as well.
So Tunes is a company which has, when I started Tunes, the idea was to interconnect mobile wallets, mobile money wallets in emerging markets. The most famous one being M-Pesa in Kenya, but you have Orange Money, Bcash in Bangladesh, probably one of the biggest in terms of number of clients, and offers those rails to remittance companies. So Tunes clients are Western Union, Remitly, MoneyGram, these kind of guys. And the value proposition which we started with, was to offer remittances to mobile wallets, mobile money accounts across the world. That was a tough sell. I started the company like 2007. And so back then I was like, putting money on a mobile phone doesn't make sense. And people in Africa, they don't have money, they don't have food, but they don't really need a mobile phone. That was the kind of mentality back then. And so that's what became Tunes. And obviously now Tunes has been sending money to bank accounts. They integrated with Visa Direct. They're able to do cash pickup as well and so on. So, and beyond remittances, they had other use cases, payouts to influencers like TikTok and so on.
Going from that experience to AAA, what was when you think back on leading that business and growing that business in that time, which was a really, really formative time for on-chain, blockchain, rails, payments, stablecoins, all of that was still very nascent and new, still is. But I think we're in a very different place with all of that technology now than back then. Were there key points or key moments while you were leading that business where you felt frustrated or pain or problems that you now are solving with AAA, what you're building there? I'd love to just know the segue of that business transition?
Yeah, absolutely. I discovered crypto, stablecoin while I was at Tunes. And what I liked with this tech is that it was solving two problems. One problem that my clients had, typically Remitly, World Remit, where when people are paying with credit cards, they have a lot of fraud, lots of chargeback. So as you know, for online merchants, when there's fraud, this fraud is eaten up by the merchant. So if somebody has taken a stolen card and the transaction is processed, the one at loss is the merchant. And so that was one of the big issues. The beauty of having something on the blockchain is that it's impossible to reverse transactions. So you don't have any ways for the user to say, hey, no, actually, I didn't do that. So that was a problem we didn't have because we were just B2B, not B2C, but my clients had. The problem I have is because in the remittance space, you have to pre-fund all your partners across the world in their currencies. So I needed to have Nigerian Naira in Nigeria, Kenyan shilling in Kenya, and so on, so on. So that's pretty, back then I had at least 300 different partners. I think it's pretty went up to 600 or something. So it means that you have a lot of working capital, which is trapped in this process. And because you have to maintain those pre-funded costs, and it means that it's being done by Swift. And Swift, as you know, is taking a couple of days, even longer, especially if there's a bank holiday. So I had a big counterparty risk and a lot of working capital money, which was trapped. So I had to raise more money than I needed just because to maintain this liquidity with all my partners.
I was just talking with the Keyrails folks yesterday on the podcast, and they were talking, was describing what you're talking about. He uses the word quantum layer. I don't know if that's the best way to say it, but historically, to what you're saying, all of these assets were living in these separate siloed places. And by putting them on chain with things like stablecoins, you create this unified layer that, to what you're saying, has a lot of advantages when it comes to finality, payments, chargebacks, things like that. So moving into AAA, how do you guys now? I know the business. I mean, I've been involved with you guys for quite some time. I know you've really been driving what started as real focus on checkout. I know you guys are expanding to so many other things. Give us a quick evolution of AAA and how you started versus where you are now. Because I know you guys there's so much that you're capable now of doing. Give us a taste of the whole start to finish evolution of where you guys started and where you are now.
Yeah, so we started with the checkout, helping merchants to add the pay with crypto payment option. That's really the key value proposition. You are a global merchant. You want to be able to sell to 500 million people having crypto around the world. So that enables you to increase your revenues. So you're able to sell to people who were not able to sell to. It's a global payment option. So, for instance, we're working with Razer or Farfetch, and we've been processing payment to over 120 countries. And that's not something you could do with the other payment options. We're taking care of the whole volatility custody. So this means that for our merchants, they are never, ever holding crypto on their balance sheet at any point in time. So our clients tend to be more of the traditional Web2 merchants who are very happy to sell to those 500 million people around the world, but who are not ready yet, even with stablecoins, to hold stablecoin in their books. So we're working, I mentioned Farfetch, Razer, we're working with online travel agent. And one thing they've been consistently telling us that in addition to increasing their sales is that the average basket size is usually around 30% higher when people are paying with a digital currency versus the traditional payment option. So that's something which is that they value very much.
And that leads us to how we met, that checkout solution and some of the work I think that we were working on with Coinbase Commerce and the checkout side of things there. It puts you guys in a really interesting position because every single day talking with the merchants like Farfetch who are thinking about processing crypto payments, the first thing they always say is, I don't want to touch crypto. I don't want to deal with the volatility of it. I don't know how to do that. You guys were always very clear about that point of, we are taking this on our shoulders. We are handling this for you. And I always felt like that was something that really resonated with merchants. Is like, hey, do this for me, handle it. I would love to accept crypto, but handle it for me. And that handling it for them, as you know, comes with a lot of regulatory requirements. It's not something, especially moving payments around, you can just do overnight. I was looking on LinkedIn, I think this morning or yesterday, and you were posting some stuff about your regulatory focus and your regulatory emphasis, how you think about that stuff as a key competitive advantage. Talk to us a little bit about that, whether in the context of payment, like checkout payments, or just how you think about the business moving forward. I know the regulatory side of what you've been building is so key for you.
When I started AAA, I really took the approach of being first a financial institution. So we're a financial institution using the digital currency rails, the blockchain rails, to make it more efficient. But our DNA is first to be a regulated financial institution. So with all the AML process that you need to have. And our goal was to get licenses in places where we wanted to operate. So we were licensed in the US, we're licensed in Europe, as well as in Singapore. And we've applied for more licenses in other jurisdictions. That's really the key. As you know, our space is under heavy scrutiny by regulators. In the US, at least 3 crypto-friendly banks have been shut down by the previous administration, and many banks are not allowed to operate fully when it comes to onboarding working with crypto companies, and which is normal. It's a high-risk industry. We need to be very careful to make sure that there's no bad actors using our rails. And so that's why we're investing so much in compliance.
How have you dealt with that? I even know when we were working together, even with Coinbase, doing all of the things. I remember there was the couple weeks where there was just some things we had to cover with Coinbase and the Coinbase account with AAA, and it was really difficult. It was like AAA is doing all the right things, but it's still often really hard to build a business in this landscape, which can often be very, especially in the last couple of years, even taking a regulated approach and a compliant approach still sometimes feels like not enough. How have you dealt with the reality of that? Because so many founders that even I speak with and know, they decide to take that alternative approach where they're not going the regulated route and they're choosing to do things in a more fully non-custodial way, or whatever the argument is there. You, on the other hand, have always been very clear about, hey, we are a regulated financial institution, but I know that comes with really key challenges. Like, what are those challenges right now for you, or historically? How have you pushed through those? I think there are probably a lot of founders listening to this right now who are debating, which angle am I going to take with this business I want to start? I'd love to hear your reasoning for why you went the way you went.
For me, it was, if you want to work with tier 1 players like your Farfetch, like your Razer, or some other, we have Grab, for instance, which is the Southeast Asia. There is no way those guys are going to work with you if you're not licensed. That's the absolute minimum that they will require. And for me, it was part of my DNA. I was already running a regulated business. We had license in the UK, in Europe, in Singapore. And so I was very familiar with this. So for me, it was a no-brainer. Obviously, there's the things which are really specific to stablecoins, to the blockchain environment, using blockchain analysis tools, how to comply with a travel rule, and all this. Those are the things which are specific. I think one thing I keep saying is that you can't outsource compliance. This is not like tech, where you give your product idea to an engineer and he goes and do it for you. Compliance is part of your core business process. So you need to understand what are your regulatory requirements in order to design your business. Otherwise, it's going to be a disaster.
Do you see the challenges that presents as a key competitive advantage to you versus other firms? Like the fact that you can do that well, get those licenses or whatever you need. Do you see that as a key competitive? I mean, obviously it's competitive, but like structurally for the business, do you see that continuing to be just a bit like right now, the last few years that we've had in this industry, it's been really hard to check the boxes that you're trying to check from a regulatory standpoint, to get approvals, to get compliant with Mika and all the other things that you guys have. That's a really hard, it's expensive to do. It's very, very difficult to understand what is required, how to get it licensed. Do you see that reality globally continuing to be the way that difficult? Because in my mind, if it stays that difficult, that will continue to be a moat. Or do you see that becoming easier over time?
With the new administration in the US, it looks like it's going to be easier. That's going to have a huge impact. And obviously, because if you take the worst today, which is Europe with Mika, and where we are in like the stupid situation now in Europe, where you have Bitcoin, which is legal, USDC, which is legal, but not USDT. I feel like that's totally insane, but that's the European regulation. I am guessing they've been really too much overboard. And I think this will have to change to make it easier. Otherwise, everybody's just going to work with unregulated entities. So that's always the stupid things, is that if your requirements are way too high, then you're pushing people to the unregulated world.
And maybe that's just what I've been seeing the last few years is, hey, we can't really get regulated and get clarity on this. So we just have to do this alternatively. But you, I think, have, from my time knowing you and watching you build and talking with the team, it's always seemed like you guys have had that as a strong conviction. What has been your process with Mika specifically? If you were to give advice or, specific guidance to someone who's starting that journey, any thoughts there? I've never gone through that process personally. I know it took some time for you, and you've been doing it you were even before it was obviously set in stone, you were preparing it.
Yeah, Mika is insane. The requirement is really insane.
What does that mean? Like, for people who don't know, what does that actually look like? But give a couple examples.
Security audit, I have to sign policies and procedure. I think we have at least, just to cover the IT side of things, I think I've signed at least 15 policies and procedures. That would be an example. They are producing, the European Commission, they're producing hundreds and hundreds of pages, because you have the law, you have you have all these kind of things. The bar, in my opinion, is a bit too high. At the moment, I don't know, there's very few companies who are Mika licensed, excluding the grandfathering of their former VASP registration. Most of the people who are pretending to be Mika compliant, they are, but it's a temporary grandfathering of their previous VASP registration, which was fairly depends on the European jurisdiction, because it was it was not a European-wide regulation.
And that eventually will expire, or that has a runway.
It depends on the countries, the member states, but I think it's between 6 months to 18 months. So you have 6 months to 18 months to actually apply and get your Mika license.
Okay. What do you think is going to happen, like in the next 6 to 18 months? As I think a lot of the European licensed entities who have a VASP who are in that position, what do you think is going to play out there due to the bar that you've mentioned that's so high?
I think some people are going to give up on Europe. It looks like a lot of people want to go to the US. It looks like it's the new gold rush at the moment. If they don't change that, I'm sure a lot of people are gonna give up on Europe. Kiefer with USDT, for instance, they said we're not going to bother.
And when you say give up, you mean they're just going to take their businesses and incorporate in paper and license them within another jurisdiction, essentially.
Yeah. And which can be offshore, and I mean like not regulated or very lightly regulated.
Yeah.
Or they're going to decide, instead of investing in Europe, I'll invest my dollars, my marketing dollars, my tech and everything for the US market. Because, you have two markets of about the same size. You're going to go to one where it makes more business sense.
What would you say, just given you've traveled all over the world, you've led companies, and you have a very global mindset when it comes to payments and leading a business and building. What would you say are the competitive advantages to staying in Europe? What would the counter argument to that be? What are the unique opportunities that you see that would present themselves if a company were to stay, become Mika licensed, and go through what you're going through? What advantage do you think that would provide them?
You have access to a very large market, which is bigger than the US, higher spending power. It's a huge market. The great thing is, like, with one license, you can operate all across the European Union. Remember, in the US, it's a state-by-state licensing process. So you need 50 licenses, maybe 51 for Canada. The US is not that simple either. We still need to see what the new regulation will be for the US market.
Awesome. I want to talk a little bit about the infrastructure that you've built. I know some recent conversations we've had together have been about infrastructure. Like what are the specific tools, companies, APIs? Like how are you going to build what AAA is to offer that as a service to other companies? And especially knowing that security audits are potentially around the corner and there are all these things that you're having to abide by. What are some key things that you've decided to implement, or technologies or software partnerships, other companies you guys lean on that help you build AAA to that type of standard?
Security is key. You know, when you're working in the crypto space, you have a big target on your back. So we're investing heavily in the security. And also, one thing which is specific to payments, especially for e-commerce payments, is that we need real time. Nobody wants to be on the checkout page and waiting for minutes for the transaction to happen. So everything has to be a couple of seconds at most. So that's also a very specific constraint that you probably don't have if you're running an exchange. You probably don't need that real-time element, but in our case, we do. So this means whether it's for the crypto wallets, we're using like Dfns or blockchain analysis tools, we need something which is able to give us an answer in a very short period of time. So yeah, that's the key on that side.
Yep. For anyone who's paid using crypto, you know how typically terrible that experience is. Historically, you've had to copy and paste addresses into separate wallets, fund a wallet, pay gas separately. And then you get to that checkout screen where you send a transaction and you're in that sort of like really anxious 30, 60 couple minutes where you're just waiting for that. And the reason why, for those who haven't done that, is this transaction is actually being confirmed and processed on the blockchain, which historically has taken a lot of time and been very expensive. How have you guys, maybe this leads into some of the wallet infrastructure itself, but how have you, I'm imagining the way you've architected the wallet backend to detect those types of payments has been a key unlock for you. What are the key technical innovations that you've pursued to reduce that user experience to be more similar to paying with a Stripe or a credit card or something like that?
So first, we need to acknowledge that the user experience of everything crypto is still clunky, especially if you're using custodial wallets. As I mentioned, what we're trying to do is to detect as fast as possible, even in the mempool, the transaction, so that we're able to give an immediate feedback to the user that we have received the money or we're about to receive the money and so on. The second thing, what we did is the partnership we did with Coinbase, but we did similar with Crypto.com and Binance, was also to have direct connections with the centralized exchanges. So meaning that if you're paying from one of those exchanges, you're going to have a better user experience. And it's not available with all exchanges, but I'm still advocating for some of the exchanges to do that. One of the problems as well for using crypto for payment is that you're going to see, I send 0.01 ETH to this random address. You have no idea what it means. What we can do is to populate the actual metadata inside the wallet, meaning that when you go on your statement, you would see, I purchased a nice bag on Farfetch. I paid, $1,000 for this. That was how much ETH it was back then. And I can even put the logo of the merchant or even put the whole description of the card. And that, making like something even better than what you have on your credit card statement. That's not something which we're still trying to push the exchanges on the wallet to have that, because my personal belief is that if crypto is not being used for payments, it's kind of useless. And I think the strategy of whether it's custodial wallets or a centralized exchange is that you want people to come back as many times as possible on the platform. For that, the best way is to do it through payment and for people to come back and have a look at their statement and so on and so on. That's the thing which we're working a lot, but because we have to partner with all those players, it still takes time, and they still have a very crypto trading mentality as opposed to being payment on how do you make an amazing payment experience, Apple Pay like one day. That's really the goal of where we want to be one day.
I love what you've done and how you've thought about the centralized payment experience. Like, it's the innovation or the loophole I think that creates and that we worked on together was always really excited me. I know there were many hurdles along the way for getting that integration going, but it makes a ton of sense. And for people who want to know more about how it's actually working, is it essentially, Eric, that AAA will have a institutional Coinbase account or Binance or Crypto.com account on their end too? So you're just doing a Crypto.com to Crypto.com ledger or Coinbase to Coinbase ledger, which is really what makes it so frictionless and beautiful. So you guys have, AAA has accounts for all of those institutions to make that work.
Yeah, and the beauty, I forgot to mention that the beauty for the user, not only it's nicer and easier, but also there's no gas fees. I know on the modern chain you don't really care so much, but it's still an hassle to have just the money to pay for the gas. So in this case, it's an off-chain transaction. It's not on-chain.
Yeah. How do you think about this, just to tease this a little bit, because I think that experience where you marry like you guys are sitting in the middle of that payment, you are facilitating or helping process that payment. You have the payer and then the merchant. They're three parties, right? The beauty of what you've done in that example is that AAA sits on both sides, where the rail of payment is shared between the merchant and the payer. And really what is happening is the wallet infrastructure is the same. The custodial or the rails that are being used are managed by Crypto.com or Coinbase or whoever the regulated entity is. And in my opinion, that is one of the first real payment use cases that I see that competes with traditional fintech like Web2 payments, is instant settlement, closed loop, fully KYC'd. It's, I guess, technically an off-chain thing, like an off-chain ledger. How have you thought about replicating that type of experience in other ways or other instances where I'm imagining with a tool like Dfns or other wallet technologies, if there is a counterparty like Coinbase, who's regulated like AAA potentially, who can sit on both sides of the transaction, whether on behalf of the payer or on behalf of the merchant. If you own both sides, you're in a really unique position to facilitate value transfer. How have you thought about that just as the business and what may be possible in the future?
The thing here is it's not really new. In the traditional payment infrastructure, it's the same thing. If you take an Adyen, a WorldPay, a Stripe, they sit in the middle between the merchant and the end user. Even if the end user is not really their client, the client is the merchant. What I've been doing is to use this traditional business model from the traditional payment into the Web3 space. So it's not rocket science, if you want. It's applying what is being done in payments for a lot of time into the Web3 space.
Yeah, I guess maybe asked a little differently. The example that you shared is a centralized custodian like Coinbase who has a retail user base and an institutional account that you guys have. There's a shared partner there, Coinbase, and that's why it works. Do you consider, like, how would that work if Dfns, for example, or another wallet technology like that you guys have or you guys use? Imagine there's a retail payer or someone with a wallet in another platform or another business, and maybe that wallet is also powered by Dfns. Do you see other unique replications of that model where you guys can, because you use Dfns, plug into other systems or process those types of payments?
I wouldn't think of Dfns really, because as far as I know, they're not doing B2C wallets. So they're more like doing backend wallet for institutional, like a AAA or like Coinbase. As far as I know, they're not. You cannot download a Dfns app as a wallet, right? But to your point, I think it's a very good idea, and we've started discussion is with a wallet like a MetaMask or a Phantom or whatever is, again, how can we make the UX of people using those wallets whenever they're paying to one of our merchants, how can we make them make an amazing UX? And that's the discussion we're having.
Yeah. What other things get you excited about the future? Are you still convicted to pursue what still, as I'm looking at the website, still looks very focused on the checkout product as a core business? But I also see you guys are doing a lot of stuff with Treasury and banking and There's some stablecoin payout stuff happening. As you think about the future, where do you really see the opportunity for AAA?
So what's amazing is that the adoption of stablecoin is really increasing. We're really seeing a huge growth in terms of adoption. What's very interesting, so as you pointed out, we started at more of a consumer to business payment, and that's great. But one of the big trends we're seeing more is to see B2B transactions. So we're seeing businesses in emerging market, but not only, who are fine to hold stable coins in their books and prefer to get paid or prefer to pay with those stable coins. And that's something which is really exciting to see, because that means that we will see this year that it's going to have a huge impact on cross-border B2B pay.
What would the journey be like? Like, who are you seeing right now doing this? Or if it's new, who do you expect to be doing this on the businesses that are coming to you for that use case? What types of businesses typically are you seeing, and what is the journey like right now to get started?
The beauty of B2B payments is that you have all type of businesses who are using that. We have a lot of corporate services like accounting, incorporation, marketing, that's more traditional services for corporations. So we have plenty of clients in this space. We've seen cross-border B2B services, so people who are selling services, so there's no goods. And now we're seeing people who are actually trading goods using stablecoin. I've got an example. I've got a client in Hong Kong. They're exporting mobile phones. They have a client in Vietnam. The guy in Vietnam prefers to pay with stablecoins, and the guy in Hong Kong doesn't know the. So we are processing that transaction for the exporter in Hong Kong in my example, and he gets Hong Kong dollar on his bank account. That's a fascinating example of people beyond the tech space, beyond the Web3. So normal people using stablecoins.
Normal people. It's interesting because it's structurally, from a tech standpoint, very similar, right? Like, it's still a checkout in many ways, at least for the sender. It's just, I'm imagining there's maybe some user experience, front end changes. But the main thing that seems to be different about that is that with Farfetch or these other retail merchants or e-commerce type use cases who are just like, do this for me. I don't want to touch crypto. This is just a new revenue channel I can open up for pay-ins. This new use case is, hey, I actually want to use this rail, this asset rail, because it's faster, cheaper, better, and I'm okay to hold and have this in a wallet or in an account? Or are you also seeing them want that to be auto-converted back to fiat? What are you seeing there? Is that business use case different?
So usually people in developed countries, what we're seeing is that they're not ready to have stablecoins on their books. The business adopters of stablecoins are usually in emerging market. When you're living in the US, so you're getting a USD bank account by default. I'm living in Singapore. Out of the box, when I open a bank account with DBS, with the largest bank there, I get, I don't know, 10 or 20 different currencies, like you have this on Wise, on Revolut. The reality is that for people in emerging market, they can't hold US dollar. Even if they're getting an international wire and in a SWIFT in USD, this is going to be force converted into their local currency. And then they're kind of stuck because it's usually a fairly weak currency. And then getting access to the US dollar is slow, expensive, and everything. So I think that's the biggest revolution of stablecoin is by downloading a simple app, you get a USD account. That's really the biggest problem stablecoins are solving, because for probably 2/3 of the planet, they can't get a hold of dollars, it means that in this case, you cannot transact internationally. So it's a great, I would say, global financial inclusion tool for those markets.
Yeah. Dollar access is something I keep hearing. I think almost every podcast episode we've done is touching on the emerging markets dollar access, massive trend. It's really exciting. I mean, it's one of the most clear utilities and use cases for holding stablecoins and increasing the value of that. So right now, if I'm going to do this and I'm in an emerging market, I have a business, I'm going to go to AAA, and will I get what feels like a dashboard, like a banking dashboard, and I can hold stablecoins? Or What does the product experience feel like right now for a business?
Yeah. So it feels like a bank account where you can withdraw. You see the incoming payments, the outgoing payments. We can make fiat payments in 50 currencies across the world. It's a complete treasury management using stablecoins on the back end. And we have some clients who don't even see the stablecoins in the middle. They don't want to see them. So we're using them to optimize our rails, but for them, getting fiat in, they're getting fiat out. They don't want to know how we do the plumbing in the middle.
Yeah, but the emerging market businesses actually want to hold stable coins. So there's sort of a difference, it sounds like.
Exactly. The emerging market, they're happy to hold stablecoin. The more traditional business, the multinationals, they're happy to get the benefit of stablecoins, but they don't want to hold them.
Last question, I guess, on the AAA, just vision and how you think about the future. I know that making money processing payments is often really hard. Margins can be thin. It's just a business that I think is difficult often to make a lot of money processing payments. Obviously, there are some key companies that do it really well at scale and they dominate and it's a huge deal. But I think it's just, in my experience, it's been a hard business model to get going. Potentially, I think still crypto payments in comparison to traditional payments, it's still just a small sliver of volume. How are you thinking about that sort of a new emerging treasury banking use case, just from a product growth and revenue standpoint? I'm imagining there's some interesting ways you could make commercial money on that side of the business or revenue on that side of the business. Does that get you excited when you think about the future?
Yes, very much. But payment is a volume game. You're making a small fee. People who are not familiar with payments are like, oh yeah, so how many contracts did you sign? How many clients do you have? Or, actually signing contract for me it doesn't bring me any money. What I need is to have actual transaction going through. So yeah, but all the payment business are like this. It's a volume game. So that's why on our side, our strategy is really to go after the bigger merchants. We are less interested in the small business because as you rightly said, crypto payment is still small and I'm making a small fee of a small merchant. So, I'm kind of wasting my time and compared to all my onboarding costs, KYC and everything. That's why I'm focusing on the bigger deals as much as possible. So if you want to make a comparison to the traditional payment world, I think we want to be more of a Adyen or a WorldPay versus a Stripe, which is focusing on S.
Yeah, it's interesting because historically with volume, you are sitting in the transfer of value. You are helping value get from point A to point B and often converting it from a fiat currency to a stablecoin to a fiat currency. You're in the position of delivering fiat value, which kind of, in my mind, almost finishes your relationship with that transaction, right? Once that payment is processed, you make your money and it's sort of, okay, what's next? If the asset that is being processed remains in a stablecoin for that emerging market use case, there actually is the relationship commercially can continue for you guys, in my mind, because it's still in that stablecoin, it's still held in your dashboard. That stablecoin is probably going to be sent somewhere else. It's exciting to think about, in my mind, the idea of more merchants, more businesses around the world operating their businesses and holding stablecoins with AAA as almost a store of value within that account. I would guess, especially going into this year, as more of these bigger established US businesses or established country businesses experience the power of holding stablecoins, even that if that's just from a yield and earning standpoint or sending and receiving standpoint, I hope that we'll see more businesses, and I think we already are seeing more businesses decide to be comfortable holding it. So I'm excited to circle back with you in about a year from now. We'll see what happens.
With pleasure.
Yeah, man. Is there any other final thoughts on where you're going, AAA this year, things you're thinking about that maybe just leave the audience with any final thoughts?
Yeah, the future is bright and all the stars are aligned. For us, it's more and more geographical expansion and bringing more businesses to be comfortable with crypto. So yeah. The road ahead looks very interesting.
Yeah. And last thing, we do have a lot of people listening who probably are on the talent side or on the how could I get involved with helping AAA grow? Are you guys hiring? Are you expanding the team? Like, what does that look like right now?
Yes, we're hiring for everything from tech, compliance, business.
And most of the teams in Singapore, right?
We have a big team in Singapore, but we have offices in the US, in Europe, Dubai, and Hong Kong. And we're happy to do remote as well.
The future is bright. Well, thank you, Eric, for the time. It's always a pleasure getting to chat with you.
Thanks for having me, Drew.